everyone, welcome to the Roundtable. With all this volatility and uncertainties in the market, we are pleased to bring fellow panelists from renowned fund houses to bring you more insights. My name is ST and I will be your moderator for this session. And the theme for this session is Malaysia Riding the Wave of Recovery. Before we begin, please allow me to introduce our panelists. Firstly, we have Dr. Tan Chong Kui, founder and chief strategist of Phillip
Hello, Yvonne. How are you?
from Malaysia, and
I'm fine.
Asset Management Asia Private Limited Singapore.
Managed to get it
Dr.
done.
Tan Chong Kui has been in the fund management industry for more than 45 years. He is a Chartered Fellow of Chartered Management Institute in UK and Fellow of the Institute of Financial Accountants in UK and Fellow of Institute of Public Accountants in Melbourne, Australia. He is also the founder and chief strategist of Firm Asset Management Sdn Bhd, Malaysia, and Firm Asset Management Asia Private Limited in Singapore. By applying his original and proven investment philosophy of never fully invest at all times, he has successfully weathered through many major crises and navigated through the volatile Asian or ASEAN markets, establishing consistent and outstanding long-term track records in the process. In 1987, Dr. Tan was rated by William Mercer Zainal Fraser as the top manager for retirement and pension funds in Malaysia. He was named by Bloomberg the second board king of Malaysia for his well-timed investments in small-cap companies and Southeast Asia's small-cap king in August 2006. Citing Dr. Tan for truly enhancing value investing, World Wealth Creation Conference Singapore 2017 named him the Warren Buffett of Asia. Dr. Tan was awarded China Top 10 Financial Intelligent Person Special Award 2010 by People's Republic of China in 2010. Also in 2010 and 2016, he was accorded the Outstanding Entrepreneurship Award by Enterprise Asia. In 2012, he was awarded the Most Respected Chinese Entrepreneurship Award in Asia Pacific by China Economic Trading Promotion Agency, People's Republic of China. In 2014, Dr. Tan was named one of the 80 global Chinese eminent business leaders by Beijing-based The China Daily. Dr. Tan was also awarded the National Outstanding Entrepreneur's Lifetime Achievement Award by the Kingsley Strategic Institute for Asia Pacific in March 2021. Next, we have Ms. Yvonne Tan Hon Yen. Ms. Yvonne is the head of equities in Eastspring Investments Berhad. Ms. Yvonne is with Eastspring Investments Berhad for 14 years. She is currently heading the equity team and overseeing all the equity funds in Eastspring. Prior to that, she was heading the investment team in insurance, overseeing more than 20 billion funds. Yvonne has 27 years of experience in the investment industry, comprising 21 years in fund management and 6 years in investment research. Yvonne has experience in managing the domestic and Asia Pacific ex-Japan equities, as well as balanced funds. Prior to joining Eastspring, she was a senior investment manager in a leading multinational insurance company, and she was also one of the pioneers of a local and Singapore-based asset management company. Yvonne holds a Bachelor in Science with First Honours, and she graduated from the Association of International Accountants in United Kingdom in 1993. She is a CFA charter holder since September 1998. Last but not least, we have Mr. Tan Gan Leong, Fund Manager from CAF Investment Funds Berhad. Mr. Tan graduated with a Bachelor of Business, majoring in Economics and Marketing from Monash University in Australia. He is a Chartered Financial Analyst charter holder and also a holder of a Capital Market Services Representative's license to carry on the regulated activity of fund management. He joined the manager in 2013 as an investment analyst tasked with research responsibilities for both the Malaysian and Hong Kong market. Prior to joining the manager, he spent several years working as a business development executive in the manufacturing industry. Alright, I hope that all of you are ready for our panelist session today. So firstly, I would like to direct my question to Dr. Tan and Mr. Tan. So the first question is, with Malaysia reopening its border effectively on the 1st of April 2022 to allow quarantine-free travel, retail and services sector are to be benefited greatly. Do you foresee that the Malaysian GDP growth will perform better than the initial expectation for the year? Maybe we can start with Dr. Tan first.
Dr. Tan, you are mute.
I thought I'm going to let the young man start first. Yeah, you know, young man is always more sharp, you know, sometimes. But anyway, maybe since you addressed to me, I think it depends on how you started, you know, targeting the economic growth rate at the beginning of the year. See, I can recall many are quite optimistic at the beginning of the year, but you realize that at the moment, actually, many has also reduced their forecast for the year because they realize that even if they recover, it may recover gradually and also selectively. Yeah, but I think my opinion is that those that got hurt very badly, like beverage lah, hotel lah, airport running lah, or traveling lah, I think those may pick up faster. You know, I've traveled from Singapore for the third time now. I realized that the number of people traveling beginning to pick up also, but it will take time. You know, my reading is that selectively some will pick up faster than the other. But I think as an investor, I think you need to analyze that. Maybe I should stop here. Gan Leong may add some exciting news.
Hi, yes, I totally agree with Dr. Tan. Actually, there are stocks that got hit quite badly, and those stocks were likely to pick up quicker than, of course, the other sectors, lah. But my view is, okay, one of the factors that could drive this would be the opening of the borders in China. So you see, Malaysia is still highly reliant or dependent on Chinese tourists. So in absence of Chinese tourists, right, I do believe that, not just Malaysia, but, the ASEAN region alone, your countries that have been very dependent on tourism, your Thailand, your Malaysia, your Indonesia, we were still, it's very difficult to reach the pre-COVID levels. So in this airline business, in the tourism business, you need to achieve a certain amount of capacity because a lot of things are still, very much fixed costs, your hotels, your airports, a lot of the costs are fixed, depreciation and all. So you need to maintain, to hit quite a fair bit of capacity utilization to be very profitable. So this will take time. And from what I see or observe right now, I think it's highly unlikely that, Chinese tourists will start traveling again this year. So from the tourism side of the view is, you have to take a longer term view when you want to invest in these stocks. Whether the earnings will kick in this year, I think it's highly unlikely. But on the GDP side of things, I think Malaysia will hit our GDP growth targets, largely due to the high commodity prices. But I will leave that, to elaborate later on. Maybe I stop here too.
Okay, thank you, Dr. Tan and Mr. Tan. So I think both speakers also agree that the tourism sector is the one that might be bringing the Malaysian GDP growth to be recovering. However, because of the borders in China, so we might not be expecting Chinese tourism. So probably we'll still need to take a wait and see strategy for that. All right, so moving on to our second question. Similar to the global market.
Can I add a bit before you go to the second question? Because
sure,
I do have some different view from them. We all know that actually the tourism will take time to actually come back because but the base is actually very small. We're talking about 100,000 last year on arrival, right? Compared to 2019 of 25 million. So it's a long way to go. But putting aside that tourism part, we think that this GDP growth, the range given by Bank Negara of 5% to 6%, I think maybe around 5 to 5.5%. It's actually doable. If you look at the breakdown of the GDP number, a lot of them actually come from consumption. So we have a lockdown last year, right? So once it opened, you find that actually the consumption growth is actually pretty strong. And so because of that, we think that this year is still a very good growth year, but beginning, maybe first quarter, we are only expecting something like around 3%. Then it pick up again in the second quarter. But this number do have a bit of downside risk, a bit fragile, because we do have a lot of external risk factor and also inflationary pressure. Yeah. That is just to add a little to their comment. Yeah. To give you a better picture of the whole GDP, is not purely rely on tourists. Yeah? Our domestic consumption itself is pretty strong.
Yeah, thank you, Yvonne. I guess there's many factors affecting this as well. So thank you so much for all the inputs from our fellow panelists for our first question. Moving on to our second question. Similar to the global market, Malaysia is also facing inflationary pressure. So do you think that the piling inflationary pressure will cause a setback to the Malaysian economy? Maybe I'll direct this question to Ms. Yvonne first.
Okay, so I get to answer this first. Inflationary pressure is actually worldwide, okay? But for Malaysia case, it's very different. We think our inflationary number will continue to be low. In fact, our official number is just 2.2%. And this year, the range is about 2.2% to perhaps 3%. Main reason is because of the fuel subsidy and the government continue to subsidize on fuel. So we do have some of the other commodity prices gone up and have some pass-through from some of the consumer company, manufacturing company, right? But this pass-through is not a very big amount. A big chunk of it is because of our fuel subsidy that has actually helped to cap our inflationary pressure, which means that if this subsidy is being removed gradually, we will see inflationary pressure kicking in quite fast. Okay? So for now, we don't see Malaysia having a lot of inflationary pressure. Our food inflation is actually slightly more than 1%. So what you actually feel is actually food inflation. Yeah? But after election, things may change, depending on how soon is this fuel subsidy being removed gradually. That is my view. That is our house view on inflation for Malaysia for now. Yeah.
Okay, thank you, Yvonne. What about you, Dr. Tan? What do you think about this?
I think Malaysia has a big advantage in the sense that energy is a very important part of our inflation components, no doubt. But I think I see from the other angle also, it also depends on the strength of our currency. If our strength of the currency weaken by 2-3% is okay, but if it weaken by a substantial amount, then your inflation will go up, And also it depends on. I think we are basically super lucky, because your component is energy, we are subsidized, and many of our products also are very well controlled. So I think I quite agree that inflation may not. I mean, if you compare our inflation rate versus US inflation rate today, US inflation is more than 8.5%, the highest in the last more than 40 years, And many countries may also follow. But the other part I think people should try to figure out, which is actually not easy, is the supply chain. Supply chain has been creating a lot of problem, Lockdown in China is not great. So the goods that coming out for export also slow down. And also the freight rate has gone up a lot. Some people were saying that some route, the freight rate has gone up 30%. So on the average, if you import goods, your chances you are getting imported inflation. And then when the goods was told get to another country, the other country sometimes also get less efficient. So I think we need to monitor inflation. Inflation is very important, especially to average or or lower income people. So that's why I think all of us are very careful. We also want to monitor closely. The world is getting complicated. I think supply chain, forex are also important issues. Maybe let Gan take the other part. I'm quite sure he has a few reasons.
Actually, I don't have much to add. I agree with Yvonne and Dr. Tan. Of course, the main driver is definitely energy price. As long fuel subsidy is still around, I think inflation numbers will not get out of hand. The second thing would be also like what Dr. Tan said, on currency. So long as the ringgit doesn't weaken too much, your import costs, your import numbers will still be relatively manageable. I would say that the last factor that we should monitor is whether the increase in minimum wage could drive higher consumption, which could lead to higher inflation. Because when minimum wage with the new minimum wage in place, companies may need to increase their selling price, which would likely lead to a higher inflation because of the lower base last year. So that would be the last factor I would say that could push our inflation numbers higher. But in absence of that, I think it's highly unlikely. We are quite fortunate being a net exporter of gas. I think that's all from me.
Okay, thank you, Dr. Tan, Ms. Yvonne, and also Mr. Tan. So I guess all speakers agreed that the fuel subsidy is the one that makes us as Malaysians pretty lucky in terms of this. So as Mr. Tan actually mentioned about the minimum wage, I would like to bring it to one of my questions, which is in terms of the rising minimum wage. Okay, so what is your view on the rising minimum wage from 1,200 to 1,500? Is this going to impact the sectors such as construction or manufacturing, given the potential increase of wage expenditure? Maybe I'll direct this question to Ms. Yvonne first.
Okay. Okay, before we talk about increase in minimum wage, already we have labor shortage in many sectors. So many sectors during the pandemic, I think, short of foreign worker, migrant worker as well. Even we find that there is pressure already on the wage. Okay, so there are some company or manufacturing base and all that already increased the wage higher than the minimum wage earlier, which is 1,200. So some of the sector, like for example, construction sector, they're already paying more than 1,500. Some of the E&E or EMS glove sector, they have already increased the minimum wage to about 1,400, very close to the 1,500. Of course, this big jump will hit some of the smaller company, the retail, the services, those that actually currently are still paying 1,200. This big jump is actually going to impact them, on the cost side quite badly. Whether this will bring additional inflationary pressure is yet to be seen for now. But there is cost pressure, then we have actually increased the productivity. If not, the SME may find it a bit difficult. But for now, you look at a lot of the labor-intensive industry, they are more than willing to actually meet the 1,500 as long as they get worker. Some of them really, some of the industry like plantation sector, like the tech, like EMS, they are short of workers. The key thing is short of workers. So the opening of borders will help to actually ease this pressure, to bring in more workers, then they can actually expand the business well. Yeah.
Thank you, Ms. Yvonne. Dr. Tan, what do you think about this?
For company who make a lot of money, like plantations and oil and gas, I guess all they wish to have is to have more workers. So this, although in terms of percentage, it's quite high. For 1,200 to 1,500, it's almost 25%. That is much higher to compensate your inflation increase. But I think for those with this kind of income level, I think especially those companies who can afford will be most welcome, because all they want is to have workers coming in because they are profitable, and with more workers, they may increase their profit even more. So I think for those group has no issue. for those marginal business, I think they may be a bit concerned, and how the government's going to handle that is important. But if you increase the minimum wage, of course the burden will be passed to the company. So I think most welcome, especially with the hard time. Company who can afford, I think, should go ahead and support it. I feel, yeah. So for those who can't, then they have to work on the improvement of the productivity. Then they will overall still able to continue, because if you have a situation where so many people are not able to meet their basic need, then that kind of society will be very difficult, So I would think that hopefully it will be okay. Okay, let's pass to Gan Leong.
Actually, I don't have
You
much
have some
prepared.
magic formula.
I don't have any magic formula. So yeah, so I think with minimum wage, I think I agree with Yvonne earlier that there are a lot of companies out there are already paying above the minimum wage, above the 1,500 actually. The construction industry in general, what I understand is, workers are being paid $100 to $150 ringgit a day. So that's far above the 1,005. It's more of being able to get workers. This would probably likely hit the SMEs that are more likely in outside of the Klang Valley area, because I think in Klang Valley most companies do pay the 1,005 range. So it's like what Dr. Tan mentioned earlier, those companies that are barely profitable, those are the ones that will have to rethink, and those they may struggle. But this could likely accelerate the progression where people start to invest more in automation, especially those larger MNCs, the businesses where they can afford to do so, because they can see globally, right? It's turning into more populist, every country. For politicians, they want to win. They start to become more populist. Start to push more policies of increasing minimum wage, taxing the rich more. So you can see that where it's heading. So I would say that the larger companies would likely, start to invest more in automation, which, in the future, the next issue would be, is whether, your unemployment levels may be higher because, people couldn't get the jobs that they want. And, again, like the issue that we see in Penang today is it's not so much on, getting workers, but getting skilled workers. They need the engineers, which they are struggling to get, so they are just poaching from each other. They pay really well there. So I would say that in the future it will be how we're going to upskill the people in Malaysia to be able to accommodate, because if automation is in place, it's no longer you hire a SPM grad and be able to run the machines. You probably need engineers where one engineer could do the job of 20 people. I think that's about it for me.
Okay, thank you so much. So I guess from all these speakers for this particular question, we can conclude that companies who can afford and companies who are profitable, this the increase in minimum wage probably will not affect all these companies so much. However, for those smaller SME companies, they might be affected. So they will need to be more profitable in order for them to be able to afford this minimum wage. Okay, so moving on to our next question. With a hawkish comment from Fed about the current interest rate, do you foresee that Malaysia will hike its interest rate? And if yes, what is the impacts of that? Maybe I'll direct this question to Dr. Tan first.
I think if you look at US, I think US has increased their interest rate, but US has their own problems in the sense that US is a very highly geared country, and they also have a lot of high price, and they also have a very strong housing. So as you can see, their inflation has gone up so high, so they cannot afford to stay the interest rate at this level. So I like to think that US has no solution but to increase their interest rates. So if USA lead to increase their interest rate. I think generally, also plus the inflation pressure, I think generally Malaysia and many other countries, and most countries, I would say, will also increase their interest rate. It's almost there that, by from now till to the end of the year, the interest rate will increase. The worry is that when the interest rate increase, especially those who don't have much disposable income, when the interest rate go up, the key is that the housing loan rate is going to go up. So they will be under very big pressure. So that will follow. People get worried that the consumption will go down. So that's why people were talking about stagflations and all this, we have to more or less accept that, interest rate will increase. If you look at USA, the interest rate at the moment is still very low. You look at the history, and it's likely that their interest rate will go up with the pressure of so much higher inflations, So I feel that you'll be almost sure that the interest rate will go up. Whether they will affect their consumption now or later is there, Then also depends on whether the economy will grow. So under this kind of pressure, one of the solutions is that every country, they must try to work as efficient as they can so that the productivity will go up, so that the overall economy will still able to grow, Yeah, that is something that we need to watch out, Of course, Russia, Ukraine problems is a big problem, It can disrupt a lot of production and so on, That's my comments now. That the interest rate, you should expect that it will go up, almost quite sure, If you want to sustain the economy, you got to find many other ways to improve on it. That is also in the hands of the management of many countries, I should stop here. Thanks.
Thank you, Dr. Tan. Mr. Tan, what about you? Do you agree with Dr. Tan that the interest rate will be increased?
So I think from my standpoint, I think like Dr. Tan mentioned earlier, US is, in a rising interest rate environment. Not just US, actually, you look at the whole North Asia, but the key driver to your central bank increasing interest rates has been inflation. So if the Malaysian inflation numbers are still manageable, if, of course, the ringgit does not depreciate a lot, because usually, what we're seeing right now is, the yen has depreciated significantly against the US dollars simply because they got differing policies, where the US is tightening and your Japanese central banks are still on an expansionary mode. So that's why you can see a big disparity in the performance in their currency. So if Malaysia's currency do not depreciate too much, and I actually don't see why Bank Negara will increase interest rate. So the key here is the Bank Negara may increase interest rate if fuel subsidy is removed and inflation numbers start to hit, or food prices start to hit, and inflation numbers also increase. Then maybe Bank Negara will consider. But in the absence of high inflation numbers and weakening currency, I don't think that Malaysian Central Bank will increase our interest rate.
Okay. Thank you, Mr. Tan. What about you, Ms. Yvonne? What do you think about this?
Okay, I tend to differ a little. I think that more likely or not, we may have 1 to 2 hike this year towards end of the year, possibly 25 basis point each time. Okay, so I would say most likely it's 25 basis point for this year. We'll have to pick up the momentum next year. But there are also players that already looking at maybe 50 basis point. Currency is one of the considerations. Let me give you a broad picture. Now, US is very aggressive. If you know that the current rate that they are going, even if they have 50 bips hike, maybe another few more rounds is also there, they may actually hit 2% to even 2.5% by end of the year. Okay, and looking at our OPR is 1.75. Even if we were to increase 25, we we are just hitting 2%. So 2%, it could be par with UK, it could be par or slightly lower than US. So based on that, we are not talking about, the spread. There is no more spread. We used to have a positive spread because US, it is a developed market, right? So without that, it is for sure the currency will weak. Okay. Maybe because of the foreign fund flow as well, because the foreign fund, for sure, they will actually go back to US or go back to other country that has actually positive spread. Okay? But we don't have inflationary pressure like US. And our inflationary pressure right now in Malaysia, because it's controlled by a fuel subsidy, as I mentioned, it's 2%, so we don't have that. But even if this fuel subsidy were to slowly remove or slowly reduce, this is a cost push inflation. So in this kind of environment, not a demand pull like what happened in US and in Singapore, I think it's a bit of demand pull. But in Malaysia, it's very much a cost push. So in this kind of environment, by increasing interest rate may not work that well. But you have to strike a balance between a bit of inflationary pressure plus currency in view. So that's why we are actually looking at 1 to 2 hike this year. But we are still lagging behind. So the catching up could be, there could be more pressure next year. Yeah, especially if we have election this year, if we have election, after that, we will see, we will have to monitor. So if the inflationary pressure come in, then the rate hike may have to be a bit more aggressive.
Thank you, Ms. Yvonne. So I think that Dr. Tan mentioned that he is quite confident that there will be increase in interest rate this year. However, Mr. Tan actually said that there might or might not be, as long as inflation is manageable. So there might not be an increase in interest rate. However, Yvonne did mention that there might be a 1 to 2 interest rate hike this year with 25 basis points each. Okay. So Ms. Yvonne actually mentioned a little bit about general election, which also brings me to my next question. In your opinion, what is your view on the 15th general election? Will this GE be held this year? And what should we anticipate for the market if the 15th GE were to be held this year? Maybe I direct this question to Ms. Yvonne first.
Okay. Because we have high vaccination rate, and then now that the borders are open up and all that, right? The concern, the new cases has also come off. So I think the time, in terms of timing wise, is quite a good time. A lot of market participants are looking at after Raya. So it could be as soon as third quarter. It could be as, I said it could be, okay? Which is a very good timing for some of the party that have gained momentum in the recent state election. So this is an opportune time for them to have a GE15 lah, okay? So that, what is the view? It depends on the outcome of the GE. Anything can happen, okay? But if we continue this momentum, looks like there won't be too much negative or positive in the market. Okay? But towards the election, there may be more positive news flow, especially on the revival of some of the mega project, construction project and all that. That could be actually spark some interest in that particular sector in the market. I leave the other two speakers to have more comment on that. Yeah.
Okay, thank you, Ms. Yvonne. Let's hear from maybe Mr. Gan. What do you think about this?
Okay, so I agree with Yvonne that I think also that general election could likely happen after Raya. I mean, because right now the government itself, the ruling party, does have momentum in their side. The last few state elections, they have basically swept out the opposition parties. So it's at their best interest to push for it. And from what you can see right now within the Perikatan Nasional, your Bersatu is also, they seem weak, they seem, looking to cooperate with Pakatan Harapan again. So it seems like, I think internally, they also believe that, an election is coming. So from our standpoint is, we think that, it's status quo, business as usual, as what we have seen in the past, whether it's Pakatan Harapan or, the Barisan Nasional, what we see is essentially stock markets perform according to how the economy itself perform. Of course, in the short term, in the near term, you may see spike in certain, government-linked stocks or construction stocks, because of election plays. But nevertheless, time and time again, actually, it's not very sustainable one. You have seen in the past where, the spike in the election-linked stocks, it gone up right before election, and then after that, it just slowly fizzles down. So again, from our standpoint is we think the election will likely come this year. It's at their best interest. And as for how we want to position for the election, I think we just stick to our existing investment strategy, what we have always been doing, which, you buy quality companies, invest in quality companies. We try not to speculate that much.
Okay, thank you, Mr. Tan. Dr. Tan, is it okay if we hear from you regarding the general election? What is your opinion on this?
Dr. Tan, you have to unmute.
I forget. I forget. Yeah, I think, thank you very much. I always make this mistake. Now, okay, I think from what I hear, I think second half or at the latest, first half of next year, there'll be election. But I think people who are interested in election always will want to forecast how the economy is coming about. Now, if the economy is going to deteriorate very big time towards the end of the year, I think the earlier they have, the better it is. Because say what you want, I think the economy is very important for people who are interested in the elections. Now, I think now one thing you should watch, if you listen to some of the talk earlier, you notice that election may not be necessarily good for the market in the sense that there is a change of corporate captain. You look at the last election, you understand that those who are in the old guard, many companies get hurt very badly. So my advice is that I think you need to analyze carefully, how you want to invest. People who depend very much on political link, you may want to be careful. The bad news about the market is that if there is a change and if some people gonna get out because they know they'll be out, then you have more seller than buyer. And very often, actually, you take a look at the whole world. Whenever there is a change of a political party, generally there's some correction, or you anticipate that's going to be change. That's something that you have to watch. That's exciting about investment. There's no super logic. You just need to assess. Yeah, like for example, people think that higher profit will give you more, will give you a higher profit for the company, the share price will go up. You know 2020, what happened? A bit noisy. Hello? So you notice that, sometimes the profit goes up, the share also can come down if your share already runs so far ahead. I mean, 2020 rubber glove is a clear example. Also, so I think my recommendation is always analyzing the company, also partially diversify your portfolio, so your growth, your wealth will grow steadily. So that my so-called view is that you just have to be careful every time there is a change of government. The market may turn quite difficult. That's it. I mean, that's all I want to mention. Yeah.
Okay, thank you, Dr. Tan, and also all the panelists. So I guess we can anticipate 15 January election right after Raya, or maybe third quarter this year. However, we will still need to we will still need to see what is the result of this election, because some of the stocks, especially government-linked stocks, they might be quite highly affected depending on the results of this election. So as Dr. Tan and also Mr. Tan suggested, they will actually analyze the companies and also purchase stocks who are more not so linked with government, so that they can actually pick stocks who are more good quality and not to speculate the stocks. Alright, so moving forward to our next question. This question is in regards to the ongoing Russian-Ukraine war. So what is your opinion on this, on the impact of commodity sectors in the long term? Maybe we can hear from Ms. Yvonne first.
The Russia-Ukraine war has already resulted in very high commodity prices and also some of the material prices and all that. Yeah, so we actually see the commodity price rally, crude price and all that already happening. Yeah, so whether things will get worse, because I somehow very difficult to see this war going to end soon, even though we all hope that this can end soon. But this could actually prolong, so the commodity price may stay high for some time. But as an investor, we normally don't take a call holding in a commodity play, because commodity price can come up and go up and then can come off quite fast, right? So it's more a tactical play for most of the funds looking at commodity company. Yeah. That is my view, but bearing in mind, currently, we also see some slowdown in China. So it is maybe more on the agri side, the veggie oil, all these may continue to see quite high price, but the raw mat, or some of the material and all that, depending on whether these materials are being used for EV purpose or for other purpose. So if it's not for some of the emerging trend purpose, the China slowdown may have some demand impact, may slow a bit of the demand side. Yeah, so the price, the high price may not actually sustain too high at the current level. It is very, I wouldn't make a very broad answer for all, because it depends on each material, each metal, each agri and all that. But for overall, I think for vegetable oil especially, we do see that it may stay high for some time.
Okay, Mr. Tan, maybe you could also take this question as well.
Hi, just on my line cut. Is it me or Dr. Tan?
Sorry, Mr. Tan.
Oh, okay. Okay. Yeah. So my view on this Russian-Ukraine war, I agree with Yvonne earlier that we do believe that edible oil prices will stay high. Hence why we do like the plantation sector in Malaysia. The reason is about 11% of the global market share of edible oil actually is in the area where Ukraine and Russia combined. They account about 11%, and about most of the Ukrainian sunflower oil production is actually for the exports market, and Russia is about half of it is for exports. So with that out of the picture, we think that actually if you really think about it, right, prior to the Russian-Ukraine war, right, the edible oil market have already been very tight. I think CPO was trading above 5,000 before the Russian-Ukraine war. So when the Russian-Ukraine war happened, of course, it spiked, above 6,000, 7,000. Now I think the spot price is above 7,000, the spot price. So from our standpoint, we think that, in that segment itself, the edible oil market, the prices could very well sustain. Because also another thing is, if you look at, if you speak to all the planters and all, it's actually very difficult for them to expand right now. What you can see is actually the bigger planters buying the smaller planters, which what we saw with acquisition of IGM Plantation. There's just not so much greenfield projects around right now, and also it's unlike a lot of other things. CPO itself, you cannot just grow the trees and start harvesting next year. It takes a couple of years, at least 4 years, before you start to produce anything meaningful. So for us, we think that in the near term at least, CPO prices should stay strong. Whether it can sustain at this 6,000 to 7,000 level, we do not think that it's a sustainable level in the long run. But we think that, the 4 to 5,000 level, it's a fair level to be at. So from that standpoint, we still like it, because at 4 to 5,000 ringgit for CPO, they are actually essentially like printing money. It's extremely profitable for them. So we think that, the Russian-Ukraine war is just adding fuel to the fire. But nevertheless, the market itself have already been very tight, because in this market, in the commodities market in general, this oil industry, in the last decade itself, there's limited investment in this whole sector. People were shunning commodities, were focusing on growth stocks, tech stocks. So the capital allocation itself, actually a lot went to growth stocks, tech stocks, and very little to commodities. And like it or not, if you look at it from an ESG standpoint, most commodity companies are always seen as, not ESG friendly, So hence they do not attract that much capital. Investors shun them, banks even at one point didn't want to borrow to the oil majors, the oil companies, in America, the shale guys. So what happened is, people just stopped pumping oil, people just stopped investing. So I think that itself would last long, whether with or without the Ukraine-Russian war. So my view is, I think commodities in the near term will stay strong. And in the long term also, unless we start to see major capex or major investments in this sector, it will remain strong. It requires a major investment from these companies.
Okay, thank you, Mr. Tan. What about you, Dr. Tan?
Yeah, okay. I'm ready. Now, I think Ukraine war, Ukraine and Russian conflict, I think seems to actually help Malaysia in some way, especially the palm oil industry, oil and gas industry. You know, Russia supply quite a high percentage of gas to Europe, and if they try to stop doing that, is also cutting down on supply quite a bit. So they have to go and buy from other places. So oil prices seems to be staying quite strong, and also because they are going for so-called nuclear energy. So they have ignored the exploration of oils in a big way. So the supply is not there. So I think oil and gas price, a lot of people still predicted that it will stay quite high. Yeah. So that will help Malaysia in a big way, because Malaysia has oil and gas. Some people who doesn't pro Malaysia always say that Malaysia very lucky, we have oil and gas, and now the price is so high. Then they will ask another question: why is oil and gas price so high, and then our currency coming down? So I like to link that the currency is very much linked to politics also, not just economy. You study carefully. Very often the currency is very much linked to politics. Okay, as a start, I think it helps the oil and gas price. Secondly, if you look at edible oil, palm oil, now Ukraine and Russia, I think, export 75% or around that percentage of sunflower, and that's edible oil. So that is not going to help a lot. So at the same time, you look at the replanting, because palm oil is not ESG. So those people 5 years ago promised that I'm going to plant so much and so much, but you realize that they are not doing that. As a result, the average age of the plantation is actually increasing. What does that mean? Your production is not so good as the plant get older. So that's also another thing. Now, I think US and Brazil, their harvest is not so exciting either. So in some way, actually, palm oil has been able to stay at a high price, so which is also good for Malaysia. Many people think that actually palm oil price may not stay at 7,000 per ton, may most probably still stay at 5,000, which is still very, very profitable. So that will come to the next question when you say what are the sector that you are likely to like. But at the same time, you also take a look at, when the electric car coming in, nickel price has gone up, although Malaysia don't have nickel, but Indonesia has, and Philippines has. But iron oil price also has come down and go up very sharply, if you notice that. Malaysia definitely has some of the iron oil. Yeah, so there's actually an oil company listed in Singapore, actually it's a Malaysian company. So I felt that if you look at it, the commodity price has been very good because also partially also created by supply chain, created by shortage of supply, So that's how I feel that although actually I'm not pro having war, because having war is the last resort you want to go to, and it's not good for anybody. But that's unfortunate now. But so in terms of investment, I always say that you need to analyze the changing of the environment. If you go back to 2020, it was such a hard time, but many sectors also grow, many sectors also you can make a lot of money out of it. I mean, for the pandemic, actually your rubber glove make a lot of money. The tech stock also make a lot of money. So for this environment, you just need to be very careful, Yeah. In fact, potentially there's a new company listed on rubber industry. I think it's going to be out in a short time. I think Sengfeng, is it Sengfeng, is coming out for the IPO. They produce rubber for tire industry. So I think at the end of the day, I also quite agree lah. If you believe in value investing, then you concentrate on that. You may also buy the share which is already cheap, can go cheaper, but then you need to have your research, you need to have your knowledge in the industry, you need to apply your knowledge now. If you have good knowledge in the industry, you analyze carefully, and in every situation, hopefully that you ended up with company that eventually will grow. That's the only thing I think I can say. But at the moment, I think we are not totally in a very bad situation. We do have some bright spots. Thank you.
Thank you so much, Dr. Tan, for your insights. So with this Russian-Ukraine war, we might not be seeing the end of it anytime soon. However, thankfully, at least for Malaysia, because we are still not so affected by it. So commodity prices might still continue to stay high, and edible oil will also continue to stay high. So in the near term, CPO prices might also stay strong, but however, will it be sustainable in the long run? That might still be a question. And this Russia-Ukraine war also helped Malaysia in the palm oil industry and also the oil and gas industry. So moving forward to our next question, I would like to check with the panelists, what is your opinion on gold? And do you think the gold price can still go higher? Maybe we'll direct this question to Mr. Tan first.
Hi, yes. Okay, so I don't have actually much opinion on gold. I think this, especially on precious metal, gold itself have always been seen as, a hedge against, uncertainty. But, when COVID happened back then, the March 2020 sell-off, gold actually got sold off also momentarily. So it's not necessary we see as a foolproof hedge. From our standpoint is, now there's a lot of these new alternative assets, people consider as like crypto itself, they see as digital gold. You are starting to see Fidelity allowing people to invest their trust pension money into Fidelity, the Bitcoin. So from our standpoint, we don't have much view on gold. We think that, in general, gold itself, over time, the demand, at least from the next generation, the younger generation, unlike last time, 20, 30 years ago, where investors, when they want to hedge against uncertainty, they buy gold. Going forward, as the millennials grow older, they may no longer share the same view. So I would say that over time the demand of gold will slowly decline. That is my view.
Thank you, Mr. Tan. Dr. Tan, would you like to add on this point?
Okay, if you look at gold, it's interesting. Gold performed very well during the global financial crisis when US dollars was very weak. And US dollars is a currency reserve, and gold at one time also the same. But when US dollars was weakened and people lost their confidence, and US is facing a lot of problem because of the global financial crisis. During that time, actually gold went up a lot, few 100%. Now, since then, if you take a look at between 2008 to 2011, when gold was performing very well, then after that, since 2011, gold has not been performing that well, but has been able to stay at a very high level. So from now onwards, if the same thing happen, then you hope that if you are in gold, then if US dollars weaken, I think the gold price will go up, because gold is now going back again as a currency at many of the country reserves, So gold is interesting, but if you run such a big fund and you are such a rich man, you may want to diversify. As you can see from the lesson you learn, the tech stock, the rubber glove stock, all these things, you need to diversify in order to sustain your wealth, Yeah. So gold price somehow tends to link up with the strength of the US dollars. So if you put gold as, you put 5% of your total portfolio in gold for a very long-term fund, it's not particularly wrong. Right? It's a part of the diversification. Like to me, the major diversification is that you put your money in bonds, you put your money in property, you put your money in share, you put your money in gold. These are all the main investment outlets. So whether you want to put 1%, 2%, 5%, 10%, it depends on how you read the market. If you read the sector right, you win. If you read it wrong, you KO. You suffered. I think everything is how you read the major trend. You meet the major trend right, you win. We have a lot of good story, but we also have made mistake in between. But in the long run, you hope that you will do well. So to me, gold is another thing. You read the gold price right, you win. It's just the palm oil now. Year to date, what happened to the palm oil? Palm oil is one of the top performers today. What happened to 2020 and 2011? People say you should go for tech stock, you should go for growth stock. Value investing is dead. But then after a few months only, and then after the Russian war came in, the palm oil price just go up. So reading the major trend right is very important, I feel. So whether you will perform in gold, it depends on how you read gold as an item of your investment outlets. Okay.
Dr. Tan, Ms. Yvonne, can we hear your opinion on this?
Okay, I am not a gold expert, but I can give my view. Gold as a precious metal will always have a position. Okay, how millennials look at it, it could be different, because now we have all these alternative and all that, crypto and all that, right? I do believe that the crypto and the NFT, all this may attract the millennium, but for the older generation, gold as a precious metal do have its position, and also as a diversification of asset and wealth. So as if the global economy is doing very well and people are getting more wealthy, they will increase the consumption, or at least taking gold as an investment. Now in the near term, gold normally don't do that well. As I agreed with Dr. Tan, that if gold will do very well when the currency is weak, okay? But now we are actually expecting Fed to hike the rate very aggressively. So in the interest rate hike environment, especially when the expectation on rate is actually going higher and higher, in that kind of scenario, it may not be so favorable to go in the near term. But having said that, unless something happens that the war situation is out of control and the world security is at risk. So whenever world security is at risk or people started to worry about escalation in war risk, then you see that the interest in gold will be coming back quite strongly. Okay? So gold, it does have an angle to look at as a precious metal. As people increase in wealth, they want the diversification as a part of asset, right? And also escalation in war risk or security. People want this asset class. So gold does actually have that angle to play. But for near term, we actually expect some weakness because of your gold is not earning any interest, whereas your currency currently, interest rate hike, and especially when US dollar is strong, it's not so well for gold. Yeah. When people lost interest in currency, in hard currency, people now have a choice to either go for crypto or go for gold. These two angles may actually position quite well as something for investors to diversify into. That's my view. I think it's more balanced view.
Yeah, that is correct. Thank you so much to our panelists. So I guess certain people, they will view gold as a certain investment tool to hedge against uncertainties. Although for the younger generations, currently they are more into cryptocurrencies, NFTs, or so on. However, as Ms. Yvonne mentioned, for the older generation, they might still prefer gold. So what about moving forward to my next question, what is your view in terms of investment properties? Will these still be a certain tool to hedge against inflation? Maybe we can hear from Mr. Tan.
Hi, yeah. So I assume investment properties in Malaysia. I think that's the question, right? Do you foresee Malaysians eyeing investment properties? So from our standpoint, we think that the property market in Malaysia, there's still a huge glut. Simply because to begin with, our population is not that big. We have ample land. It's not like we run out of land, like Singapore or Hong Kong, where they got, they don't have much land left. So in Malaysia, sense that you have developers who are still building up properties, and they, like it or not, they are still very profitable. These are developers are still commanding 20-30% profit margins, for developing properties. So despite there's still a massive glut, you read in the papers, there are a lot of properties unsold. Developers are still launching new projects. So from our standpoint is, properties in Malaysia are, just priced out of what people can afford. So for properties to do well in Malaysia, I would say that we really need the Malaysian income to go up significantly, which is something we have yet to see. In absence of that, I do not see that the property market in Malaysia doing well in the near term, simply because there's just too much properties going around, and there's not much people actually being able to afford these properties. So one metric that I will always look at, whether the property market is attractive or not, is I look at the yield. What kind of yield you're getting. When you invest in a property, your rental yield. If your rental yield is at least above what you get for when you put your money in fixed deposit, then okay, it's still quite decent. But today there are a lot of places where your rental yields are only 2%. So that is like extremely low levels. Your 10-year MGS is now trading at what, 4.2%. So from what I can see is I think that the property market is still overpriced at this point of time. So my view is I don't think it's a good hedge at this juncture, at least for Malaysia.
Thank you, Mr. Tan. Dr. Tan, what about you? Do you agree with Mr. Tan? Sorry, Dr. Tan, you might need to unmute.
Property definitely is one of the investment outlets for sure. But at the moment, if you look at Malaysia only, then Malaysia seems to have a glut. Yeah. But then when you invest, you compare with a lot of things, If you put your money in the fixed deposit, what is your option? And then if people like property, then they have to go and analyze and buy a property company that is going to give them a return much higher or higher than your fixed deposit. So is that very difficult to do? It's of course quite hard to say, So you buy a property company that you think is no chance to go bankrupt. That's very important. Property sometimes they go high, and then can still grow, and then the price is selling at record low. Then because of the oversupply, then you park into that. You may not make money 1 or 2 years or 3 years, then you may certainly make a lot of money later on. So it depends also on your currency. If your currency is weak, then it can get weaker, then you may also make some money. But when you ask a question of property in Malaysia, that's where the problem is. Malaysia seems to have the oversupply problem. But if you go to Singapore actually property is record, and then you make a lot of money out of property. Not only that, the currency strengthened. And you go to Indonesia. Indonesia also done reasonably well, and Philippines and even Vietnam, So of course you say buying Malaysian company. If you're buying Malaysian company that has overseas exposure, maybe a bit better, although there are very few, So that's fine. You see, especially on a crisis time, what are your investment outlet? You must be very clear. Today you have money. If you are the person who have your money and put in a fixed deposit, what sort of return do you have? Then you can analyze, To me, property at the end of the day, especially under listed property, the price of that share is very important. If the price of the share is very low, you potentially can make money. Definitely part of your diversification, just the same as more than 6 months to 1 year ago. What happened to all the plantation share? Also very low. Then suddenly it come out. Property also, okay, you have this oversupply. Suddenly, okay, if the oversupply is reduced and people then projected that it's going to be better, then it will be different again. So I'm not totally so pessimistic, but I'll be very careful because you are going to the sector which has problem, like for example, the property has problem also in China. Yeah, so you need to be very careful in a very competitive, challenging sector. You may still make money, but you need to be careful. Okay, I think price is important. Thank you.
Thank you, Han. Maybe we can hear it from Miss Yvonne.
Yeah, okay. I do agree with both of them. First thing is I agree that in Malaysia case, we have a glut. We have overhang. Inventory is still very high on overhang. But I also agree with Dr. Tan that outside Malaysia, there's a lot of opportunity. Let's focus in just Malaysia. Does it mean that Malaysia don't have opportunity? Price is very important. He actually mentioned about price. I also mentioned in property location is very important. And now you have to look at those overhang inventory in which particular area. So try to avoid that. But we can actually see that the demand for landed properties is actually coming up very, very strongly. In fact, some of the new launches are being just grabbed up very fast. Okay? Bearing in mind that we have inflationary pressure, so all the building material costs have all gone up. So even if you want to do renovation, it's going to cost you a lot of money. So so I think that part. Also, we have this glut issue. We have all this negative sentiment issue for a long time, and people have real demand wanted to buy a house. Yeah. So there is real demand. So there is still pocket of opportunity. What the other two speakers didn't mention, I will just mention about the REIT, because some of you do not want to buy or invest directly in physical property. You want to actually consider REIT. Unfortunately, REIT at this moment, I would say that because of a lot of the retail REIT, office REIT, they are not doing so well because rental reversion is under pressure. So we are not talking about positive rental reversion, which is quite sad. And in an interest rate hike environment, especially when MGS, right, is 10 years already hitting 4.2. And if your rate is only giving you 4 to 5% return without rental reversion, it's not attractive. So from that angle, it's not very attractive. Unless you're going into industrial REIT where there are continued expansion with positive rental reversion and also expansion opportunity, then maybe you can see some opportunities. But as a diversification, if you think that putting more money in a fixed FD is too low, and at the same time you cannot take risks in buying funds, then you may want to consider REIT as one of the asset class. Yeah? So there are many investors with different risk profile and all that. There's always something that you can find opportunity to invest in.
Thank you so much for your answers, our fellow panelists. So I guess in Malaysia, there is still an oversupply in terms of property. However, if, as what Ms. Yvonne mentioned, if you feel that your FD rate is too low, but you are too, you cannot take the risk of an equity or unit trust funds, then probably you can look into property, and it's also good as part of your diversification. So moving on to our next question. Malaysia's petrol electricity supply is subsidized by the government. With the ongoing conflict as well as increasing inflation, do you think this subsidy is sustainable, and how will that affect Malaysia's economy? Maybe I direct this question to Mr. Tan first.
Hi, yes, okay, so I think the whole presentation we talked a lot about fuel subsidy, right? So basically from our standpoint is, prior to election, I see very little possibility that the government will actually reduce the fuel subsidy. Nevertheless, it does actually, strain the government's balance sheet. It's because, right now, I think if I'm not mistaken, that day they were saying that petrol prices it's about 5 times more in Singapore compared to Malaysia, so government is actually paying for it, which actually is, controlling, actually suppressing our inflation. But post-election, I think Yvonne earlier mentioned also, there is a possibility that the government will gradually reduce the subsidy, which I think is highly plausible, mainly because how the government will likely approach it is they will highlight that they will want to target the B40, so it will be a very targeted subsidy instead of just broad-based for everyone. So that's how I see it. More likely it may happen after the general election.
Thank you, Mr. Tan. Maybe we can hear from Ms. Yvonne.
I kind of agree with Gan Leong that it will happen after election. There's no way they're going to do it now. It's very sensitive for the fuel subsidy. On the implementation, how they're going to do it is actually quite difficult to have a targeted group that they actually offer subsidy. I don't know why. This idea is not new, but there seems to be keep postponed the whole idea. I think maybe the execution part could be quite challenging, yeah. But nevertheless, this is something that they have to do because it's like costing government, I think, something easily 30 billion, for this fuel subsidy. So they may have to slowly reduce the fuel subsidy after the election, and also after election, they have to find way to increase revenue. So in other words, whatever way they can increase tax revenue, even including GST, it could be an issue to the rakyat, yeah. After that, just to make up, just to cover some of the high operating expenses by the government. So I don't see as for now any risk, but after election there is a risk of slow gradual removal of the subsidy. And once they do something on that, the impact on the inflation could be quite immediate, and quite the magnitude can be actually quite big. Okay? Hopefully the government learned from the previous experience. They wouldn't hike it too much and too fast. Maybe gradual. Then the impact on inflation wouldn't be too harsh. If not, we will have a bit of issue on that. Yeah. Okay, I let Dr. Tan add whatever comment you want.
Yeah, Yeah, Dr. Tan, do you have any input on this?
I thought it was the Minister of Finance job, it's not the fund manager's job. I think it is a headache. They have been thinking about this for a long time, but you also, Malaysia is a very, to some extent, like to help out type of country. So if you take away that, the people who are on a lower income actually affected very badly, I would say. But then at the same time, also, are you able to subsidize also the foreigner? So the foreigner will come in and also buy your petrol at a cheap price. But I don't know how they're gonna handle that. But anyway, it's something that they really have to think about to balance to find a solution, to find a strategy to balance up, and then for the good of everybody. Yeah, I definitely think that it's in their mind, and I don't think they cannot resolve that. It's just that how they want to do it. You also need the money. Yeah, so not an easy job, but I think they will find a solution. The way I look at it, I don't think it's so difficult to improve on it, but to have a perfect strategy, I think this is not possible in my view. You just somehow have to find a strategy that benefit most people. It's very hard to find a perfect formula. Just like fund manager, fund manager cannot have a perfect formula. They don't. They will try to do it and give you a fixed income, give you a balanced fund, give you a growth fund, all this, trying to meet your needs or different group of needs. But maybe fund manager is better. You can design so many products to meet their different needs. I think it's not an easy job, but I think they should be able to find a solution. It's just that when will they implement it? That's all. Thanks. That's all I can offer.
Thank you so much, Dr. Tan, and also Mr. Tan and Miss Yvonne Tan. So our next question is, as Russian Gazprom halts its supplies to certain European countries, can we anticipate another round of soar in energy prices in the near future, or rather this push the need for renewable or alternative source of energy faster? Maybe I'll direct this question to Dr. Tan first.
You have to unmute.
Sorry, Dr. Tan, we can't hear you. Could you unmute?
No, I think it's quite bad. Automatically become muted or unmuted again. So every time I have to go back. Sorry, I just continue and say, I think ESG is there for a long time. I think European is very advanced going into renewable energy. I think this will push them to work harder, but I think may not be able to catch up so fast. As you see, Europe, many countries, depending on which country, depend on Russia to supply them the gas up to 20 to 40%, depend on which country or which period. Winter time they will use more and all this. I like to think that Russia is still interested to supply them because they will get the money to run their country. Then how do we resolve the conflict is more important. So I think as long as you disrupt the supply, the oil price can go up further. But of course, US now offer to supply them. US will be happy to supply them at this kind of high price. So hopefully that they will resolve the problem. Otherwise, same again, the poor people don't have the electricity, don't have especially when the winter time comes, they will have a lot of hardship. So whether you will see another surge, but I think on the average, I think people still think that the oil price should be able to stay reasonably high, not to the extent that you remember in 2016, the oil price went down to below $50, and then 2020 it even went out to zero. That's because of the disruptions. So every time there's a disruption, you will go the other way around. So in some way, also your ability to see long term, your ability to be able to assess. But I think the demand for oil will still be there. So the increase in using electric car and other things or to use solar, to use wind, to use hydroelectric power will take time. But it's a good way. It's a good direction that we are interested in environment. We are interested to think that climate change is coming, but you need to know how to resolve the problem. So the intention is there and it's good, and hopefully that you will move towards it. In between, you have this suffering. I mean, in life, I always say there's no perfect parents, there's no perfect politician, there's no perfect fund manager. Even Warren Buffett will have problem. So when we have problem, we have consolations. You need to plan for that. You need to have plan. That's why I think some of the cultures are good. You work hard, you save your money. In the raining day, you have lesser problem. So I think if you run anything, oil price will go up and down. But you must know how to solve the problem. I don't know how else I can say it. Thank you. Maybe my colleague, my fellow panelist will give some idea.
Thank you, Dr. Tan. Maybe we can pass this question to Ms. Yvonne.
The near term, I agree that energy price will be high now. But as I also agree with Dr. Tan that I think Russia will want to continue the supply because they want to have revenue coming in, right? But in the mind of a lot of the countries in Europe and all that, in the long term, they would have already planned how to be more self-reliant on energy and food security in future. But this does not come in, in the short term. But in the short term, they have to face this energy crisis. But in their mindset, in the longer run, they better have prepare for food and energy security in the longer run, so that they don't overly rely on another country or on import. Okay? So in the short term, in a high energy prices kind of environment, they may have to put on hold some of the plan that they had. Like for example, some of these countries may have very strict ESG concerns, so they want to phase out coal totally. They may want to put on hold in the short term. It's not that they don't concern about ESG, but there is a long term that they still actually stick to the long term plan. But in the short term, because of the energy crisis, they may want to put on hold some. They may want to revise some of the coal and that. But in the longer run, in the back of the mindset, they better have a plan for the long term food and energy security. I will let Galiong add more.
Maybe we can pass this question to Mr. Tan.
Yeah, so from our standpoint is we think that of course in the near term energy prices will stay elevated, largely due to I think Europe actually imports 40% of its gas requirements from Russia. But what I see is going forward, there will be diversification from the source of energy. So I think historically, why did Europe actually become so dependent or reliant on Russian gas? Because Russian gas was the cheapest around. So actually, I've read a couple of reports where America actually back then have already tried to get the Germany to actually invest in LNG terminals, so that they can buy more gas from America. But nothing goes through because from most of European standpoint is it's still a lot cheaper to just buy Russian gas. But going forward, again, food security, energy security is no longer just being the cheapest. So we do see that there will be a lot of investment in oil and gas infrastructures because they will try to source energy from other countries, Qatar was being asked to actually increase their investments in natural gas, to expedite it, so that, because right now at this point of time, I think the Europeans are paying more than 5 times what Americans are paying for gas. So it's just extremely expensive. And this is not even summer yet. So usually the two periods where, they require a lot of energy is during summer, where you need to increase your when you start using your air conditioning, and of course your winter. So right now, at this point of time, it's still okay, still bearable. But in the coming months, you may see if the Russian Ukraine conflict continues to escalate, or nothing is resolved, you may see another spike in oil and gas prices.
Okay, thank you so much to our fellow panelists. So I think to conclude today's session, we'll ask one more last question, which is, with all these topics discussed, can you suggest some sectors that have a positive outlook in Malaysia? Maybe we'll start with Miss Yvonne first.
I like consumer play because if you look at the breakdown of our GDP growth and all that, consumption is still very high. And in fact, our central bank is very positive on the consumption growth this year. Private consumption, they expect 9% growth. Okay, we like some of the consumer name, but price is very important. So we do look at the valuation have to be attractive for us to actually enter into some of the consumer play. As I said, commodity, some of the name at this current high price is very profitable. But I would say it's more for technical. But in the longer run, structural for Malaysia, we do like the tech company, because valuation has also come off to a more reasonable value, and some of them do have very strong position structurally in the longer run. So we want to position for that.
Thank you so much, Ms. Yvonne. What about Mr. Tan?
Yes, so basically for us, in the near term, we like commodities because we still think that it's the best proxy to the rising inflation. But nevertheless, in the longer term, you take a longer term horizon, we like the tourism and leisure sector. So basically the reopening place. So what I see is there will be a huge shift on spending from goods consumption to services. And that is what we are seeing in America actually at this juncture. So going forward, when borders all reopen, people start traveling, we are going to see that shift, from goods consumption to services. And because of the COVID outbreak in the last few years, there are a lot of restaurants that closed down, there are a lot of hotels that closed down, airlines that, not doing so well. So there will be a capacity problem when all the demand come back at the same time. So what we're going to see is, you saw back then, PC sales have been struggling for years. But, when COVID hits and, when everyone start rushing to buy PCs, desktops, the demand just increased, and there's just insufficient capacity to meet whatever is demanded by the consumers. So we see that, within the services sector itself, there will be similar trends as well. So in the longer term, we like the tourism and leisure sector. When the borders reopen, we will not be surprised, like, our casinos will do well, the gaming industry, the F&B industries may do well, because, when tourists come in, after years of not being able to travel, they will spend, and you will have a higher frequency of travel as well. In the past, people may be traveling, twice a year, but because, past few years they couldn't travel, they see some of the loved ones pass away because of COVID, or got really sick. So, it gives you some clarity in how you look at life itself. So you were likely to see that people will be more willing to spend, and I do believe that the tourism and leisure sector will do extremely well. But in the near term, maybe not. It will take time, but in the longer term, that is something that we really like.
Thank you, Mr. Tan. What about Dr. Tan? Dr. Tan, which sector do you think will have a positive outlook in Malaysia?
A very difficult question, but anyway, I will try my best. Okay, first I think I would like to start with this. I think US market is not cheap. I think US also have a strong influence on many other market, but that doesn't mean that you don't do your analysis or your valuations. Now US is very high. In many ways, US are facing problem. So I am uncomfortable and also think that they have a strong influence over our market. That's number one. But if you are value investing, then you need to analyze carefully. What we like is that we like a very undervalued stock, and we like a company that can grow. So you need to analyze. So I always make this statement that you analyze the environment, and it's keep on changing. 6 months ago, plantation share are not popular. Now it become. Yeah, rubber glove become very popular after such a long time of lousy price, so we also need, then tech stock comes in along and all these things. But if you ask me the certain sector, I think in the shorter term or medium term, hard to say. You have to keep on analyzing how the price move. Like for example, oil and gas shares, if you like oil and gas, and but these shares are very much affected by the oil prices. Sometimes people don't even analyze the fundamental of the company. So you also need to do that. I still think oil and gas seems to be able to stay for a while, but you need to watch it also. Palm oil seems to be doing okay. The edible oil, the demand is still there. Yeah, we are also not, although tech stock has corrected a lot, but we will monitor them. The tax area will still grow in the long run. At the moment, they may face a lot of problem. For example, they are short of parts and all these things. So you need to analyze it. We are in a situation where we are quite difficult. Of course, there are some medical, to me, the price is important. I would also agree that consumers will recover. But if the consumer share has gone up so much, you need to be careful. Not, people say renewable is good, growing, but if the price is already so high, so what's the point having a share that can grow, management very good, but the share price is so high that you can only lose money, There's no point to do that. So that sometimes that's why value investing work. Then sometimes you get very confused. Of course, the value go up and down. So I think we will, in summary, we still will practice value investing. We like undervalued stock with the growth potential. Although sometimes when you buy the share, you go down first before it goes up. But like I said, as a fund manager, in the longer term, you must be able to outperform your fixed deposit, must be able to at the same time, hopefully also outperform the index. Now, if you can do that, you clearly will diversify and grow the wealth of the investor. That's my simple summary. Yeah. There are, at the moment, it's go up and down. Some of the stock, you can go any sector, but if you pick the best of the sector and you diversify them, in the long run, you'll still be okay. I don't have a perfect formula. I think that's my best advice. Thank you. I hope I try to answer your question.
Thank you so much, Dr. Tan, Miss Yvonne, and also Mr. Tan. So Miss Yvonne and Mr. Tan, they actually have the same opinion that commodities will be profitable in the short term, and Miss Yvonne likes the tech stocks in the longer term, and Mr. Tan likes tourism and leisure in longer term with the recovery factor. So Dr. Tan advised us that value investing is always very important, and that you'll need to see the growth potential of the company and also pick undervalued stocks. So with that, this is the end of our Phillip Roundtable session. We hope that all of you enjoyed and also benefited from this session, and we'll see you again in the next one. Thank you so much to everyone who dialed in, and also to our fellow panelists who shared their opinion and insights with us. Thank you so much.
Thank you.
Thank you very much.
Thank you. Bye. Take care.
Bye-bye.
Hello.